For the past decade, Silicon Valley chased one number above all else: model size. More parameters meant more capability. Bigger training clusters meant better benchmarks. If you wanted to signal leadership in artificial intelligence, you trained a larger model than anyone else. But in 2026, the conversation has shifted. Silicon Valley is no longer obsessed only with how large a model can be trained. It is increasingly obsessed with inference efficiency. To understand why, you have to understand the difference between training and inference. Training is the process of teaching an AI model using vast datasets and enormous compute clusters. It is expensive, but it happens periodically. Inference is what happens after training. It is every single time a user asks a question, generates an image, runs a search query, or triggers an AI-powered feature. Inference is constant, it scales with users, and it is where the real cost lives. At small scale, inference costs seem manageable. But when millions or even billions of users interact with AI systems daily, the computational demand becomes massive. Every response requires processing power. Every request consumes electricity. Multiply that by global usage, and inference becomes one of the largest ongoing expenses in tech. That is why Silicon Valley is obsessed with inference efficiency. The first reason is simple economics. Training a frontier model may cost hundreds of millions of dollars, but it is a one-time event. Inference costs repeat endlessly. If each query costs even a few cents in compute and energy, and you process hundreds of millions of queries per day, margins shrink quickly. Companies cannot scale AI products sustainably if inference remains inefficient. This is especially true as AI moves beyond experimental tools and into core consumer and enterprise products. AI assistants embedded in smartphones, productivity software, customer support systems, search engines, and enterprise workflows generate continuous inference workloads. These are not occasional interactions. They are daily infrastructure. If inference is too expensive, companies face an uncomfortable trade-off. Either they limit usage, raise prices, or accept lower profitability. None of those options are attractive at scale. The second reason for this obsession is hardware constraint. The global supply of high-performance GPUs is still limited relative to explosive AI demand. Even when companies secure large allocations of chips, those chips must be divided between training new models and serving existing users. Inference competes directly with innovation for resources. If a company uses most of its GPU capacity to answer user queries, it has less headroom to experiment with next-generation models. Improving inference efficiency frees up compute for research and development. In other words, efficiency today funds innovation tomorrow. There is also an energy dimension. Data centers running AI workloads consume extraordinary amounts of electricity. As AI adoption grows, so does power demand. Utilities in multiple regions are already under pressure from expanding data center footprints. Inference workloads run continuously. They cannot simply be paused without affecting user experience. That means they create stable, predictable, and heavy energy demand. Improving inference efficiency reduces power consumption per query, which directly reduces operational strain and long-term infrastructure costs. In this context, inference efficiency is not just a technical optimization, it is an energy strategy. Another driver of Silicon Valley's obsession is latency. Users expect AI systems to respond instantly. If responses are slow, adoption drops. But delivering low latency at scale requires significant compute resources. Highly efficient models can generate accurate responses faster and with less hardware. This becomes especially important as AI shifts toward edge devices. Running AI inference on smartphones, laptops, and embedded devices requires models that are not only accurate but lightweight. Devices have limited battery life and thermal capacity. An inefficient model drains power quickly and overheats hardware. Companies designing AI-powered gadgets must optimize for performance per watt, not just raw capability. Inference efficiency determines whether AI can live comfortably on personal devices or remain confined to large data centers. There is also a strategic shift underway. Early in the AI boom, companies competed on who could build the most powerful general-purpose models. Now, many enterprises are more interested in reliable, specialized, and cost-effective systems tailored to specific tasks. Smaller, highly optimized models often perform better for targeted applications. They require less compute, lower inference costs, and can be deployed more flexibly. Silicon Valley is recognizing that efficiency sometimes beats scale when it comes to real-world deployment. This realization is reshaping research priorities. Engineers are investing heavily in model compression, quantization techniques, distillation methods, and architectural innovations that maintain performance while reducing compute requirements. Chip designers are responding as well. Instead of focusing solely on maximum peak performance, hardware companies are emphasizing energy-efficient inference accelerators. Specialized AI chips optimized for inference workloads are becoming central to data center and device roadmaps. Even software frameworks are evolving to prioritize efficient deployment. Runtime environments are being redesigned to minimize memory usage and maximize throughput. Every layer of the stack is being scrutinized for waste. Why such intensity around efficiency? Because AI is no longer a lab experiment. It is a product. When AI systems were primarily research projects, high compute costs were acceptable. Today, they are embedded in subscription services, enterprise contracts, and consumer devices. They must operate within financial and operational constraints. Investors are also driving this focus. Public markets are increasingly sensitive to margin pressure from AI infrastructure spending. Companies that demonstrate strong inference efficiency signal better long-term scalability. Efficiency is becoming a competitive advantage that shows up directly in earnings. There is another subtle factor. As AI usage expands globally, demand patterns become less predictable. Sudden spikes in user activity can strain systems. Efficient inference allows companies to handle higher volumes without constant hardware expansion. It provides resilience. Silicon Valley's obsession with inference efficiency reflects maturity in the AI cycle. The industry is moving from headline-grabbing model size to disciplined deployment strategy, from raw capability to sustainable economics, from breakthrough moments to operational excellence. The companies that win this phase of the AI race may not be those with the absolute largest models. They may be the ones that can deliver strong performance at the lowest cost per query, with the lowest energy footprint and the highest reliability. Inference efficiency is becoming the quiet battleground of AI competition. In a world where every user interaction triggers computation, efficiency is not a minor technical detail. It is the foundation of scale. It determines whether AI remains a premium feature for a few or becomes embedded everywhere. Silicon Valley understands this. That is why the obsession with inference efficiency is not temporary. It is the next chapter in the AI arms race.